All right. SoFi Q4 predictions. I released some predictions this week. Chris released predictions this week. Tannor released predictions this week. They are all different, but similar. Where do we want to start? Do we want to start at members?
Let's do some member predictions.
Start with you because you're the lowest. Yeah.
620,000 members.
I'm lower. Yeah, I'm 610. They had a huge spike from Taylor Swift. And I know that fall is typically strong. They have the football games going on at the stadium. There was people that were thinking of maybe signing up anyway that may have done it in quarter 4 that just got accelerated to quarter 3. So I think it'll just be a little bit lower. 610 is still really good.
So I had 630. I kind of share Roy's thoughts where I think that they pulled a lot of growth forward. I think Taylor Swift was probably a tailwind in the third quarter. Her movie did come out in fourth quarter, which is good for brand awareness. I think that they probably tried to pull a lot of their growth forward to make sure that they could cut back on sales and marketing and make sure that their expenses were basically flat quarter over quarter, right? Sales and marketing is the easiest thing to cut. So 630,000.
All right, so Roy's at 610, Tanner's at 620, Chris is at 630. I put mine in a range. I'll pick a number for the sake of this episode, but basically the thing that I looked at was the last 2 years of member growth. Q4 is always coming at the highest member growth, whether it's some seasonality, whether it's something to do with NFL or whatever. Q4 is usually when they sort of let loose on the member count. That might be very different this time around. It might buck that trend if they're cutting sales and marketing, if they're actually focusing on profitability. 650 to 725 was sort of my range. I'll go for 685.
So this is going to be very interesting. I can't believe you said 685 because I was thinking 687 until I looked at the chart. 739, let's smash it.
Oh, baby, love it.
In the past 2 years, as Tevis just said, Q4 has been the biggest. Let's be super optimistic.
So Steve basically thinks that we will break a new member record in Q4. And the funny part of this all is literally the management team in the last earnings call said, guys, stop expecting 600s and 700s, expect 500s. And we're literally 600 and above, all of us. So
it's because they sandbag. That's why.
Everyone's looking at a mix of, it's not just about members. They also have other goals that they're trying to achieve, like profitability. So how high is their sales and marketing numbers going to be in order to get more members? For products, I said 936,000. I'll actually be a little bit more specific and I'll even go up a little bit. I'll say 950,000 new products.
Yeah, I went with 900,000. So it's basically just 1.5x. My prediction just slightly lower. I think it'll just come in soft for the same reasons as I mentioned that the member growth will come in softer. They're just not pushing it quite as hard this quarter. Other objectives.
945,000. For me.
1.1 million. Let's get it. It's just 1.5x off of my number. My member count is higher. So 1.1 million.
What is it with these 1.5x's? Jesus Christ. A mil even.
Is that your number? 1 million?
Yeah, a mil even. I have a question for you guys about the whole product thing. How important do we think it is correlated to what Robinhood is seeing with their 401s and everything else? Like, do you think that has anything that we need to be worried about here with SoFi?
From what management said is that they're not really seeing any competition with other fintechs, or at least they're not worried about it. Pretty much all coming from incumbent players. Q4 was a great quarter for markets in general. December was a great month. I think that it'll be good across the board for brokerages, for the Robinhoods of the world, even for SoFi Invest.
They're just apples and oranges, man, because of it's so diversified. Like you have personal loans, student loans, home loans, and then Relay is a huge part, right? SoFi Invest, sure, SoFi Money, but you have all of these different avenues that just Robinhood just doesn't have. And so it diversifies your risk a little bit in terms of one stream being hit.
Just briefly, I think Robinhood they're the brokerage, the kind of Gen Z and millennial brokerage of choice, right? That is unfortunate. Wish it was SoFi. I don't think the UX is as good as SoFi. And then also they've got this 1% match for moving your stuff over, which SoFi's done similar things in the past, but isn't running that promotion right now. But I do think at the same time that SoFi is actually focused on a different cohort of people. They're looking for people who are more worried about passive investing rather than active investing. But I do think that Robinhood's probably going to take a lot of the market share here that could potentially go to SoFi. But SoFi has a lot of other offerings, right?
And the other thing is, since the Invest platform is just, it's okay. It's not terrible. It's okay. There's a chance that as people come on, they'll be very unhappy with the product and want to go to Robinhood or something else. Versus with Robinhood, it just makes a lot of sense. That is their bread and butter. It's an incredible product and platform. And yeah, they make people stick around for, depending on the product, up to 5 years to be able to get those returns. But I think people will want to stick around anyway, versus with SoFi, you might have a situation even where with some of the issues that they've had on the platform, they pay to acquire them. And yeah, the person wants to break early, and so they don't have to pay that matching. But there's still a cost there to SoFi. And that's just, it's not good. It's not a good look. So I'm completely fine with the way that they're treating this. They do other things better than Robinhood. This is not one of them.
Chris, whenever it comes to new originations, personal loans, student loans, home loans, how are we giving away all these loans? Are we selling any? What's going on?
I think that we will sell some. It'll be really interesting. So what we do know is that in the first, like before the first call, before the Q3 earnings call, they already had sold $475 million worth of loans, right? So 375 million were securitized with BlackRock, in conjunction with BlackRock, and then they sold another $100 million to the same partner that they sold $15 million to in Q3, and that's the same partner that they've got a forward flow agreement for 200 million or $200 billion for 2024. So if in the first month they were able to get 475 and then things started to ease, you'd think that they might have added to that total. The interesting thing is that the narrative was still kind of higher for longer through most of Q4, right? Up until about December, which is when Powell came off and gave kind of dovish comments. And that's when the narrative really started to shift. But rates had been coming down. Like if you look at the 10-year and the 2-year, the treasury yields, they had been coming down for some time. I would guess that they sold some. They're going to sell as much as they originate on the mortgage side. Student loans are harder. They have enough room on their balance sheet for one more quarter to really not have to sell. And if they say, hey, we're going to maximize returns and holding gives us better returns, I wouldn't expect a huge blowout number for sold loans in Q4. But honestly, I think that right now, with rates coming down, the forward curve is coming down, right? Fed rates haven't moved, but the forward curve has moved quite a bit. And so with the forward curve coming down, I think that they're probably in talks with a lot of people for Q1. Because last quarter, they actually gave us a bunch more information on what they were doing inside of fourth quarter than they did inside of the third quarter. It'll be interesting to see because it really could go either way. They could have tried to start offloading more loans inside of Q4, or they could have gotten like close to their capital reserves so that then they're maximizing their return. So as far as originations go, this is a graph of personal loan originations per member. Q4 is actually the lowest in the past 2 years. I would expect something similar along this level. So about $470 dollars in originations, especially because they might be pulling back a little bit because they also are probably going to have some student loan originations. My prediction for personal loans was about 3.6 billion. And then last quarter, they jumped from, call it 400 million to about 900 million in student loans. That's a pretty big jump here. So that's a pretty big jump, $500 million in a jump, and payments hadn't even restarted yet. So I'm kind of assuming a slightly larger jump to about 1.6 billion in originations for this quarter for student loans. I think that it can get there or higher, but
student loans is a number that I'm going to be looking at within the actual products to take a look at the originations for this quarter round, because the speed of that ramp up, I think people are underestimating it, and it could be a big factor.
Still, personal loans will be by far the strongest. It's what's bringing us in all our money as long as defaults don't rise too quickly. But yeah, like you said, the demand for student loans is just going to be so strong this quarter.
The gain on sale margin on student loans is actually pretty similar to what we get from personal loans historically. So it's been around 4% gain on sale margin. The ones that they're originating right now are going to be at significantly higher rates. We're talking somewhere probably around 8 or 9%. I don't have the insights that they do into their business, but from the outside looking in, the way that I would do this if I were SoFi is I would probably originate the personal loans to hold and originate the student loans to sell.
With student loans, I was actually seeing just a little bit more than they had for quarter two. There's a couple of reasons for that, but just to give some backstory, I work for a major online university. It's one of the top 5 in the world. So I think that what we saw with quarter three, the moratorium is over. And of course, there was some people paying off their loans anyway, doing the right thing. But, those people that were like, okay, I'm one of those first early students. They came in hard. I don't think that we're going to have that for quarter four, frankly. I'm reading a September 2024, at least for the federal loans. I don't think that we'll have that big spike. So I'm guessing 500 million.
So you actually think it comes down from last quarter?
Significantly, yes. I think a lot of it was just front loaded for quarter three.
Just to push back on that a little bit, I see these CNBC articles around borrowers not wanting to restart student loans, or borrowers, being reluctant to sort of pay back their loans. And I think there was a poll where, 40% said they were boycotting or whatever. And we know that Biden has incentivized that type of behavior with basically that grace period on loans. You project all of this bearishness, and then SoFi reports, and then they beat to the upside. It cannot be underestimated the strength of the cohorts that SoFi deals with regards to the FICO scores. It's a completely different beast.
And average incomes.
And average incomes. And so you have your sort of average borrower, this person who did whatever, BS degree at a BS university. And then you have like doctors, lawyers, all of these super, like the Henrys, essentially, the high earners, not rich yet people. And they're all going to SoFi. And so I think that there's a big discrepancy between what we see projected in the media around like the bearishness or the FUD around repayment, and then what SoFi reports. They're two different ball games altogether.
What we saw in Q3 was a singular month of just letters being sent out. Now in Q4, we're seeing 3 straight months of saying, hey, your payments are due. I'm hoping for at least more than $1 billion in student loan originations. But yeah.
Their FICO scores were really, really high in Q3.
Yeah, 781.
Like it jumped a ton, right? So previously it had been in the low 770s, if not high 760s, I think. But it jumped a lot in that quarter, which means that like they're tightening, right? They're being very picky, so they probably could or choose to originate more there. There's a decent graph of it, right?
One
So
of these things
high
are not like the
760s.
other.
Exactly. And all of a sudden it jumped.
What are you guys thinking for deposits across SoFi for this quarter? Are we going to see that same similar 2.3 to 2.7 billion dollars?
I'd like to see 3 billion. I'd like to see it start with a 3. That'd be a nice start to the year.
It's 15.6 right now. Average member has $5,100 in their account.
I'm with Steve on this one. I think like I would love to see a 3. I don't expect it to be like crazy out of the range of expectations, but I do think that it's going to come in higher than last quarter.
I think that there's a chance, given who a lot of SoFi's clients are, they'll get bonuses, maybe significant ones, and they know how good the rates are at SoFi. So, I think it will be higher than quarter 3. I know that kind of contradicts with what I said as far as a holiday spending, but, sometimes people treat bonuses a little bit different. So, yeah, I'd guess 3, flat.
I would probably say exactly what we saw last quarter. 2.7 is what I think I'd say, 2.8.
I went with 2.92, which is basically flat from Q3. It's done this weird thing where it does a step change and then stays flat, and then does a step change and then stays flat. Third quarter had a bunch more new members than I'm expecting in fourth quarter. So that's why I kind of think that it's going to stay flattish rather than going up.
What is the next prediction that we want to?
Tech platform.
Tech platform. 11 million new accounts, massive acceleration, 30% margins, maybe 29. That's my guess right there.
So last quarter we added, it looks like about 7.4 million accounts. So I think probably, I don't know, maybe 10-ish. So we'll call it 147 million accounts. I expect them to accelerate to about a 40% year over year run rate, which would put them at about 98 million in revenue for this quarter in the tech platform. Because they really do. They need to start accelerating now. And they've guided like a couple of times this year. They said, in Q4 is when we're going to see a return to growth.
You might want to mention contribution margin.
So last quarter, they saw this huge jump in contribution margin, a 15% jump. And if you go back, and I have the quote in here, so we'll look at the actual quote. They explained why this happened, and it makes me think that they're going to see the same thing again this quarter. Here, in addition, Q2 was elevated as a result of a few one-time items, and then in Q3, we benefited from lower comp and benefits as a result of maxing out on payroll taxes for the year and a few other one-time items. So if they already maxed out on payroll taxes for the year in Q3, it means that they're still maxed out on payroll taxes for the year in Q4. This is the reason why I actually think that in Q4 we'll probably see again really high contribution margin, so somewhere around 35% plus, plus or minus 2 or 3%, around 35%, and then I think it'll drop again. I think it'll drop back down in Q1.
I'm hoping accounts go up. This quarter is not about the tech platform. It's about talking about the RFPs and the process about not just utilizing the tech platform internally and the residual savings that they're going to generate. Like, I'm very interested in what bank signed up with them. They said a large regional signed up. I would love for them to say who, if they're able to. And I want to know what RFPs they're in and how close they're getting, because the sooner that we get big clients moved on to this, the sooner that they can start monetizing this and growing the tech platform at scale.
I think there's a lot that they can disclose if they choose to without breaching their NDAs, right? Like they could say something like, this is how many regional bank partnerships we have, and this is how many, small community bank partners we have, and this is how many, B2B clients there are. So like there is information that they could give without disclosing anything that's confidential. But right now, as of right now, we don't get any of that information, which is one of my frustrations with the amount of information that comes out.
If anybody from the SoFi team is listening, or maybe they should add a slide in the PowerPoint presentation that they put out every quarter with a pie chart that shows large financial institutions, regionals, community and thrift banks, and B2B customers, and show how many customers in each segment utilize their tech platform. That way we can see how it grows quarter over quarter.
So they've said that as it becomes a bigger part of the revenue stream, that they will give more clarification and more numbers, basically, and more clarity on what's going on there. But I don't know what those numbers will look like or what they will.
We have, I think, 600 or so people watching right now. And I said to the chat, the thing that kills me is that the SoFi executive team is probably sitting in their living room with a beer in hand, just laughing at us idiots poking around in the dark with our predictions when they already know all of the numbers ahead of time. So, okay, if you thought my member predictions were bullish, I think the tech platform is really where I go off the rails, because I am placing just a lot of confidence in the fact they're going to be increasing the member accounts, whether it is a pilot program, which I don't think we're there yet. I think it's too early still. My prediction for those was Q1. I put 14 million new accounts at Galileo, which brings them up to 151. I think 145 to 151 is really that range where, we can expect. If we hit 14 million, that is going to be a significant improvement.
That would be a 10+% growth sequentially in their accounts. I hope it happens. Everyone here hopes it happens.
They used to grow 10 million a quarter back in like 2021.
Yeah, I mean,
like when they first acquired Galileo, right? And neobanks were a cool thing, and rates were low.
That's post-COVID. That's 0% interest rates. That's a whole lot of funding for fintechs. That's not going to happen. Or we're not going to get back to those growth rates, at least for a while. But
it's just a matter of when the pilot programs are going to end and when they're actually going to start having the full migration of accounts. That can happen this quarter. It can happen next quarter. We don't know. One quarter, we're going to wake up and we're going to say, holy crap, how did SoFi add 30 million accounts? It's because they validated the pilot program.
Let's do EPS.
I think it's interesting to see, before we give our predictions, what the street is looking at going forward. I mean, they're looking at 6 cents for 2024.
That's full year, 6 cents, by the way.
Full year. But look, think about this. 2025, 22 cents puts it at a forward PE of about 34.
EPS prediction for this quarter from analysts is 0. It's 0. It's just like under 10 million, just eking through, profitable, in the black. That's it.
What are your guys' predictions for EPS?
Mine's 2 cents.
I'll just be honest. Mine's under a cent. I would expect somewhere between 5 to 10 million.
Yeah, I'm actually expecting 3, or at least it'll round up to 3, just because I think that they have hammered in that they're going to be gap profitable for so long that they took every measure, including perhaps reducing the inflow of some of the new members and loans that they could sell, even the layoffs. Like, it's a small thing, but they waited until January. Maybe they did that just because of holidays, but it could also been like, you know what, we don't want to pay that severance fee coming out in the fourth quarter. So I think that it'll be a good surprise of 3 cents EPS.
So I have 2.8 cents because I looked at what the gap net income would be, but it rounds up to 3 cents. It's only slightly above the EBITDA guide that they gave us, is what would work out to that.
Chris, take it easy, man. That's like half of what they're expected to earn this year.
Yeah, well.
But that 2024 target is laughably low. Like, it's like, I actually had to pull it up from a couple of different places because I'm like, that's off. They just have bad data, and they don't know what's going on.
But what would be not sandbagging that number for 2024?
I think at least 14 cents.
Yeah, because you got to look at it like this. They're going to be profitable this quarter. Otherwise, they would have warned, they would have said something. Because if they don't warn and they miss, I think that they got to come in anywhere from 2 to 4 cents this quarter. So I'm going 3 cents. The normalized estimate is 4 cents. The gap estimate is zero. But when I look at a quarter over quarter basis, this quarter consensus is zero. Next quarter is zero. Q2 is 1 cent. Q3 is 2 cents. Once they become profitable and they report, it doesn't matter if it's half a cent, 1 cent, or 5 cents. The second that they are GAAP profitable, it becomes a different ball game. They can no longer miss anything.
Mhm.
And I don't think that they can come out of the gate in Q1 when they report in May and come out with anything less than 4 or 5 cents. I just don't see that happening. I could be 100% wrong, but this becomes a different ball game when they're profitable. Expectations are going to be more. I think 2024 is going to be 15 to 20 cents for the full year.
Tallied it up in my head, thinking of growth and thinking what Steve said. I think they could hit 25 earnings per share for the year. I really do.
Jeez.
That would be surprising, but I mean, it's inside the realm of possibility.
Mine's like half that. I think 12 cents would be a great year.
Either way, we're going to get an initial guidance this quarter for the full year 2024. So we're going to understand what the ballpark is of what SoFi is expecting. Obviously, they're going to raise it 3 more times throughout the course of the year, but we're going to get an initial number.
So these are the estimates for next year. They're estimating, call it 5 cents. Some other places have 6 cents. That works out to about $530 million in EBITDA. So, because SoFi doesn't guide for EPS, right? They always guide for adjusted EBITDA. So that people, when they're watching this on Monday, or when they're looking over the investor presentation on Monday, if you see something that's above 530 million for the year, that's going to be higher than what Wall Street is estimating for next year. And this is back of the envelope, right? This is close but not exact. Their guidance was for 140 million in EBITDA for this quarter, which means if you just said that SoFi is not going to grow at all for the entire next year, that would end up being $560 million. If they hit their guidance for EBITDA this quarter, and then they don't grow EBITDA 1 cent for each quarter from here on out for the next year, they're still going to come out above. That would still be more than 5 or 6 cents of GAAP net income for next year. So I think their guidance will end up being correlating to a GAAP EPS of between 8 and 13 cents. But I expect them to at least get 14.
I think that they'll guide for 8 cents. I do believe that.
Their original 2023 guidance on the low end, let's just look at the low end, was 260 million in adjusted EBITDA.
Yeah.
In Q2, it got revised to 333 million. And now the low end's 386 million. So they went up by 126 million throughout the year on the low end. This year, 2024, is going to be very interesting.
So this is based on that 50-50 revenue split. So if you assume that lending is flat from Q3, this is their revenue this year. It's going to be right around there. If you assume that lending revenue, the only 2 assumptions that go into this is, number one, lending revenue is completely flat. Now, if you assume that when they said 50% of our revenue is going to come from lending and 50% is going to come from the tech platform and financial services, and then you say lending is completely flat from last quarter's level, so from the third quarter levels, you end up with $2.74 billion in revenue next year. So that's an increase of 680 million, right? And then they've guided, so they've said multiple times, for every $100 that we make, 30 cents of it will drop to the adjusted EBITDA line, and 20 cents of that will drop to the GAAP net income line. So if you just take what management has said at face value and conservatively say lending will not grow at all from last quarter's levels, what you end up with is an extra $680 million in revenue, and that corresponds to an extra $136 million in GAAP earnings for 2024. And if you assume that they start at break even, that the total GAAP net earnings is only that 136 million, that's 14 cents for next year. So that's why I say I think it's going to be 14 cents or more.
All right. What did SoFi close at today? I know we have trading on Friday, so it might not be.
765.
All right, 765. Chris, you're up first.
Dude, first of all, if there's anybody listening and they think that I have any idea what the stock price is going to do,
That was my answer.
they're morons. I am so bad at short-term price action, okay? I'm just going to throw this out there right now. This is why I am a long-term investor, is because I always get short-term price action dead wrong. Okay, that being said, if they do what I think that they do, so they beat by, call it 3 cents, and they beat by, I think it was like 15 million or maybe a little bit more analyst estimates for Q4, and they guide up for next year, I think we probably get at least, I don't know, I think we come close to touching $9. So probably like high eights would be my guess. We'll call it 885.
Love it. Roy, you want to go next?
Sure. I'm going to say $11.
Roy, how does that make sense, man? You expect them to report 500,000 members. You expect them to miss, numbers, lowest on members, and $11.
Well, I said, a lot of that was intentional to get be sure that they hit GAAP profitability, 3 cents. I think people get excited, and there's a lot of short interest on this name. And so I think there will be some covering. Once they're GAAP profitable, people say, okay, I need to rethink my short position. And as a result of covering, I think that we really do see $11. Like, it touches $11. It doesn't stay there. I'm not saying that. And then it'll fall back.
Let's stick on that. There's still 13.2% short interest in this.
It's not insignificant, but guys, just like to preface it, I really do think that we're going to hit 11. I know it was a little different environment, but in August we did that on earnings, which were not nearly as good as the previous quarters, and I don't think as exciting as hitting this GAAP profitability. Plus, we're going to see the guidance. I think it's going to be exciting, but I am not making a short-term prediction or bet as far as my money in SoFi. It's all shares or leaps, except for I sold some puts. So, either I get money or I get shares. I'm happy either way. So please, please, please don't take, my guess or anyone else's guess and say, hey, I'm going to buy short-term degenerate calls for Monday. Don't do that, please. I mean, the stocks can do funny things when sentiment shifts, when there's been such bearishness. I know that there's going to be covering. I think we're going to see the typical run up for SoFi because they always beat. They always do. There's going to be excitement, and I think that it's going to come back down. Where it lands at the end of the week is a different matter.
If they come out and beat with 3 cents, and if guidance is strong, Noto is going to have a much different tone on TV. And he's going to be on Bloomberg. He's going to be on CNBC. I would not be surprised if this goes over $10. Now, keep in mind, I do not trade. All my shares are long-term.
I, like Chris, have no idea what's going to happen with the price action. It's not even adding up. This quarter is going to be such a blowout quarter to just even match what they're saying for expectations. If they're going to get to something like 3 cents EPS, some people are saying 5 cents EPS, these sorts of things, this stock price increase could be unbelievable.
It's going to be good. Just have the long-term horizons. I completely agree with Tannor. We don't know. We're just guessing.
2030. Seriously, investing is a long-term game.
Mm-hmm.
Nobody can predict anything in the short term.
I think that it could definitely break into the 9s.
Yeah, I'm just going to say 850. So
I'm just going to leave it on what Roy said. Thank you all so much for coming.
tune in on Monday morning for the SoFi earnings live stream where we will hopefully all be there, except for Steve, maybe.
Thank you all so much for coming. Appreciate your time. Bye for now.